Welcome to the Stock Hacker Academy show. I'm Erwin. This is Joel.
Howdy.
Joel, what are we talking about today?
13 best stocks for beginners.
Yeah, that's kind of like a general thing.
Yeah.
some of these are...
I'll admit now it's a clickbait title.
At least people have heard of these companies.
Yes.
And I think they all make money. They all make money. Mm-hmm. But yeah, that's a good place to start.
And so the point is we've talked a lot about like getting the foundation, understanding what's going on in the stock market, understanding what you're supposed to be looking for or what you can look for in stocks. And so this is just an attempt to say, hey, if you have a brokerage account set up, here are some of the basic stocks or ETFs to start investigating. This is not a recommendation. Don't take this list and go put money into all of them. No, this is meant to say, hey, if you want solid companies that have been around for a little bit or have proven to perform well, or maybe they're the biggest companies, and you'll see what some of the reasoning is as we go through, start investigating here. So that's the purpose of this one.
Yeah, start investigating. You don't have to investigate them all. No. Just pick 1 to 3. If you're a beginner, 1 to 3 is the absolute most. Mm-hmm. Right? If it's an index, you don't have to research nearly as much as an individual company, especially if it's a more riskier company, including some of the ones we talked about today.
Yep. So first up is the indexes. This is probably, Warren Buffett is famous. You know, almost every single shareholder meeting, they always open up the floor to questions and because it is a shareholder thing, so they let people just grill them. And honestly, a lot of it is looking for stock advice, and he always comes back to you can't do better than it's hard to do better than investing in index funds. And so the easiest way that we've found is SPY if you want to invest in something American, or
and SPY is the ticker, SPY.
Thank you.
For the S&P 500 and denominated in U.S. dollars.
Yes. So if you want to make appreciation in U.S. dollars and collect dividends in U.S. dollars, SPY, SPY, S&P 500 index, top 500 companies in the stock market. The Canadian side to that is VFV, that's the stock ticker. That is the Vanguard Canadian fund ETF that follows the S&P 500.
Right. So for you Canadians out there, which majority of you are listening, that if you don't want to convert your dollars to US dollars, you can do the Vanguard version of the S&P 500. And just to add to the Warren Buffett point, it's not a common quote. I actually had to dig through it. I had to do a lot of deep Googling, deep research, and I found it in some shareholder notes that he said to an individual, if you enjoy researching stocks more than 7 hours a week, then do so. If you do not, you are an amateur. Thus, invest in the index and go back to your day job. Mm-hmm. So that's why the investing in the S&P 500 is a popular investment vehicle for many, as it is advice from Warren Buffett.
Yeah, it's too easy to get in trouble otherwise.
And it's nice and boring. You don't have to do a lot of things. You don't have to overthink it.
Yeah. And you have exposure to, especially if it's S&P 500, you have exposure to the top 500 companies in the market. So what I have on my screen here is the S&P 500. It's the S&P 500 ETF, SPY. A line graph, so it shows you its performance over the last 5 years. And it's done about 55 to 56% appreciation. Now that's after all of the pain that the market has been experiencing for the last several months. So still, last 5 years, averaging 10% return, 11% return per year.
Not bad.
Not bad, considering it's dropped 20% in the last several months.
And you didn't do anything to really earn this return.
Nothing. Now, an interesting piece here is the dividend is 1.6% roughly right now. Dividend yield, is 1.6%. So it actually pays out just a little bit of cash every quarter. And that gets included. You could include that into your performance or your ROI calculation. We actually did do an ROI calculation on that. We're going to compare SPY to BMO. We'll do that later. Mm-hmm. I think that's actually a good segue to the next segment, though, which would be the banks. They are the top 5 Canadian banks.
Yeah, we could choose many different companies, but we just chose to do one segment that most Canadians are pretty familiar with. Mm-hmm. So we're talking, again, banks. Not a bad place to have your money right now. They pay very good dividends. a lot of our Canadian banks pay almost double what the their American equivalents do in terms of dividend payouts, in terms of dividend yield. So it's not a bad place to be earning some income in this inflationary high interest rate environment. With interest rates expected to go up, you would imagine the banks would be able to take more money from us, charge more money to us.
Yeah. And the interesting thing right now is usually banks, 2%, 3% dividend yield on a bank. Right now, 4%, 5% because the prices are so low and they haven't dropped their dividends. Whether or not they will, we don't know. We can't foresee the future.
Yeah.
But
some of the banks have actually raised their dividends within the last 3 months.
Yeah.
So it's we'll see what happens.
We actually did a whole video taking a look at the 5 Canadian banks. That was last week's video. So if you want to take a look at that, we'll put a link in the description below. Up next would be FANG. So that's Facebook, Amazon, Apple, Netflix, Google, and we also include Microsoft in there. Some would also include NVIDIA, but the only reason why we included these is because they're popular and they're big. We were just talking about how when Apple makes a move, it affects the whole market. When Amazon makes a move, it affects the whole market. Apple wants to come out with its own AR set or VR set.
Yeah. Augmented reality. So it's not VR; it's augmented reality headset. That was just announced the day that we're recording this right now. Tim Cook announced it or shared it, and then usually this moves the market. Facebook didn't respond much today, but again, I think it's good business sense to stay out of Apple's way.
Right, and Amazon's for that matter, and Google.
Because they all control the data. They all have, like, whoever owns the data. Data is almost the most valuable currency commodity in today's
100%.
economy.
Yeah.
Right, and then who owns the data? It's tough to say. Many companies have more data on us as consumers than Amazon, Apple, Google. Right? I've got an iPhone.
I have a Google phone.
Right, so you have an Android phone, and so you got to imagine that they have a good idea of what we're using our phones for, and that'd be Apple, Google, and then of course I think we all buy stuff on Amazon, so they know exactly what our consumer behavior is.
And anybody who slips through the cracks is probably on Facebook. So
right.
The disclaimer for the FANG stocks is they are all heavy tech. And right now, tech is getting slammed. We saw Netflix lose half of its value last month. We saw Facebook lose, I think, half of its value as well, maybe a couple months ago, on bad earnings reports. And it wasn't even the bad earnings report, but the drop in subscribers, and then the forward outlook was poor. And so people are very finicky with these. It's not like banks. Banks you need a bank. You don't really, you could get by without Google or Amazon, or you could definitely get by without Netflix.
A lot of people are getting by without Netflix and Facebook.
Yeah.
So the point we're trying to make is the companies that we mentioned today, they all have different moats in terms of their ability to defend their business and grow their business. So definitely take that into account when you're evaluating business. Facebook's ability to protect their revenue streams is very different than Apple's, as an example, or compared to a Canadian bank. In my experience, they increase their banking fees and people don't even bat an eye.
Most people aren't switching bank accounts just because their banking fees increased. A lot of people will cancel their Netflix subscription because they up the Netflix subscription fee. And
in my experience, I'm losing services as more and more tellers disappear while I pay more in fees.
Right? And the banks will adapt. I actually did close my Scotia account when they started to mandate checking fees. And I went to Tangerine, which is still Scotia. So, yeah.
So can we get into the BMO SPY comparison?
Absolutely. Okay. What you see on the screen right now is a numbers breakdown of SPY, which is, again, the S&P 500 index fund, ETF, and BMO, their performance over the last 5 years. And I had to do a bit of a manual calculation on this. So if anybody has a better metric for this, we're all ears. the price 5 years ago versus their current price. What was the appreciation on that? How much have you, if you bought 5 years ago, how much have you collected on dividends since then? Add those dividends to the total appreciation. What's your total ROI? So here again, even with the stability, and you can see, and for the sake of just for all who listen a little bit better than they might see, SPY's total ROI, dividends included, by my calculations, is 63.02%. BMO's total ROI, dividends included, is 50.96%. So even though BMO is paying out approximately a 4.4% dividend right now, and the SPY is only paying about 1.6%, the SPY is still doing better in overall holistic view. So even if you want the relative safety of something like banks, it's hard to argue the performance of the index over time.
I agree. But there are some benefits to, in this analysis, we look at BMO, for example. Part of your return is a cash return. In my experience, most investors will take a lower total return if part of that's cash.
Yeah. So you have more investable cash. Then there's there's the argument for if you're doing a DRIP program, so a dividend reinvestment program, and you're essentially buying more BMO shares with the house's money, what's that return look like? That's a whole other study.
A whole other study.
Yeah.
But again, this is just for just to spur conversation and questions for yourself to maybe you want to dig this further. Maybe you're good here and you just want to buy investment real estate.
That's definitely an option too. Also an interesting time too.
Interesting time to buy bank stocks. And like Joel was saying earlier, like the SPY, the S&P 500 has been beaten up quite a bit right now. So the banks are down well off their highs as well. So this is an interesting time to compare the two.
Just for kicks, I'm going to take a quick look here. All right, so what we're looking at on the screen right now is BMO, and from all-time highs, they're down about 22.49%. That's as of June 23rd. So, that's an interesting spot to be in. That's a 20% discount on your stock.
So I'm watching this. I'm not going to do anything significant right now. We're recording this on June 23rd right now. I'm still weighing things out. Every time there's an interest rate announcement of an increase, the market's performed as if they didn't know what was going to happen.
Yeah.
So it doesn't feel like the market's baked in everything. The market keeps sliding down, even though the interest rates match what the market expects. So why would I get in when I think the market might continue to go down? I expect interest rates to keep going up for the short term, for the immediate term. So why would I get in while the market continues to go down? Yep. So I'll be waiting for the trend to reverse, and then I'll be getting in more.
Yeah, same here. It's although it's tempting, these prices are interesting, but too often I've seen a bit of a rally, drop, which is typical in a bear market. So
right, and it's exactly what we're seing right now. But this could change soon. We don't know when. But we'll let you know when we start taking action.
Yeah, absolutely.
Who knows if we're right though.
So if all of this is intriguing to you, again, it's more of an impetus to investigate further for you. If you're not sure how to make decisions for yourself or what to do if I say if the market crashes, we are now technically in market crash territory. We actually have a guide for this, what to do if the market crashes in 2022. That's literally its name. Because we, back in March and April, we saw some of this coming, and it wasn't us predicting it. I mean, the people we're listening to also saw it coming. So we decided to say, okay, well, what would we do about this? Well, we put together some ideas, and we put it in this absolutely free report. It's ready for you to download, completely free. You can go to watchsha.ca and sign up and download there.
Yeah. So. And it's all below as well in the description if that's easier for you. And like and subscribe. And I hope you enjoyed the show. Come back next week and we'll have some new information that we're looking at, because we're investors too, and we're hoping everyone else is doing well out there and hopefully do well in this area as well to create another side hustle, preferably 6 figures.
Yeah, absolutely. Stay calm, and hopefully we see you next time.
Peace.